Welcome to today's episode of the Deep Dive Credit Podcast, presented by Elite Credit Solutions. We are your trusted partner in affordable credit repair, proudly based in Tampa, Florida, and dedicated to serving clients across the entire United States. Join us as we explore the intricacies of credit management, share expert insights, and empower you with the knowledge you need to achieve your financial goals. Get ready for an enlightening journey into the world of credit. Let's dive in.
And today we're tackling something that hits close to home for a lot of folks: medical debt and how it can mess with your credit report. There's a new rule from the Consumer Financial Protection Bureau, the CFPB, that's changing the game, and we're going to break it all down. We're looking at press releases directly from the CFPB, plus some great reporting from CBS News and CNBC.
Yeah, it's a pretty tangled web, but we'll make sense of it.
Okay, so first, can you paint a picture of the problem for us? How big is this issue? We're talking about a ton of money, something like $49 billion in medical bills, and it's showing up on the credit reports of about 15 million Americans. That's a lot of people facing financial hurdles just because they got sick.
And you got to remember, a bad credit report can snowball into all sorts of problems. You could have trouble getting loans, renting an apartment, even getting certain jobs.
It's wild. You could miss out on opportunities because you got sick or injured. It's like you're being punished for taking care of yourself. I was reading a quote from Chuck Bell at Consumer Reports, and he talked about how confusing the medical billing system is. It often leads to debts that aren't even accurate ending up on your credit report. It doesn't seem right.
Yeah, and that's a big part of what the CFPB is trying to fix with this new rule. They've basically banned medical debt from credit reports that lenders use.
Wait, so lenders can't even look at medical debt when they're deciding whether to approve someone for a loan?
Exactly. They can't use medical information at all when making those lending decisions.
Wow, that's a pretty big deal. What led them to make such a drastic change?
Well, their research found that medical debt doesn't really predict whether someone will pay back other kinds of debt. So having medical bills doesn't mean you're more likely to default on a car loan or mortgage.
Interesting. So was the CFPB's thinking that including medical debt on credit reports was like discriminating against people, or was it more about a flaw in the credit score system itself?
It seemed more like they saw it as a flaw in how credit scores worked. Like, those traditional models didn't account for the fact that medical debt is kind of different.
It's different how?
Well, for one, you don't choose to get sick, right? It's not like going into debt for a fancy vacation or something. Plus, medical bills can be super unpredictable. One minute you're fine, the next you're facing thousands of dollars in expenses. And the CFPB actually found that these medical bills on credit reports led to tons of mortgage applications getting denied, even though the applicants would have been able to repay the loans.
Man, that really puts it into perspective. This new rule is basically trying to level the playing field, isn't it?
Exactly. And the potential upside is huge. The CFPB estimates it could boost credit scores by an average of 20 points for those affected by medical debt. Plus, they think it could lead to 22,000 more affordable mortgages getting approved each year.
Okay, so this is clearly a big win for consumers. Now, you mentioned credit reporting agencies before. Can you remind us how they fit into all of this?
Sure. So we've got the big three: Equifax, Experian, and TransUnion. They're the ones collecting all your financial info, including medical debt, and putting it into those reports that lenders use. They actually started doing some stuff last year to remove smaller medical debts, under $500, from their reports. But this new CFPB rule takes it a step further.
Why were they removing those smaller debts? Did they see them as less important, or was there another reason?
I think they were starting to realize that those smaller medical debts weren't really a good way to judge if someone was responsible with their money.
So it was like they were recognizing that medical debt was different.
Exactly. A small medical debt doesn't tell you that someone's bad with their finances. It might just mean they had a surprise medical bill or got stuck with a confusing bill.
It makes sense that the CFPB rule builds on that idea and makes it a system-wide thing. But how does it actually work for someone who has medical debt? What are the main parts of this rule?
Okay, well, the big change is that it says lenders can't use any medical information to decide whether to give you a loan. So no denying loans based on old medical debt or making you put up medical equipment as collateral, which was allowed before.
Hold on, they could actually make you use a medical device as collateral.
Yeah, sounds weird, but it was possible. This new rule shuts that down.
Good to know.
Yeah.
What else is included in the rule?
The most important part is that it bans credit reporting agencies from putting medical debt information on those reports they send to lenders, so lenders won't even see it.
So it's a pretty broad ban. Are there any exceptions to this, like times when lenders are still allowed to look at medical information?
Yeah, there are a few specific cases. Like if you need to pause your loan payments because of a medical issue, the lender can check your medical info to make sure that's legit. And if you're taking out a loan specifically for medical expenses, they can look at that info too. But those are pretty specific situations.
Got it. So it's not a total blackout on all medical information, but it sounds like a big step forward for consumers. It's great that the CFPB is being so proactive about this.
Totally. And this isn't the only thing they're doing to protect people from medical debt. Back in October, they issued guidance saying that trying to collect on medical debts that are wrong or not legally valid is against the law.
Oh, yeah, I remember that. It was like they were putting debt collectors on notice that they're watching.
Exactly. And last year, they put out a whole report on the harmful effects of medical debt and reminded credit reporting companies and debt collectors about what they're supposed to do under the No Surprises Act, which is all about protecting people from surprise medical bills.
It seems like they're really tackling this from all angles. But with such a big change, do you think there will be any pushback? Could this rule get challenged?
There's always a chance, yeah. The CBS News article we read said some Republicans might try to reverse it. There's been pressure on the Biden administration to not make new rules before the next administration takes over.
So it could turn into a political battle.
It might. But an analyst we were reading about, Jarrett Seiberg from TD Cowen Washington Research Group, said he doesn't think overturning this rule would be a top priority for the incoming administration. He said they might be leaning more towards populist policies, so they might not want to mess with something that helps everyday people.
So we'll have to wait and see how it plays out. But for now, it sounds like a huge win for people struggling with medical debt. It feels like a move toward a system where you don't get penalized for getting sick.
I agree. It really shows how important it is to have financial well-being and how much that's tied to being able to get health care.
It definitely makes you think about the bigger picture. Like, if medical debt doesn't hold the same weight anymore, will we see healthcare providers and insurance companies changing how they do billing?
That's a really good point. If they can't use credit scores as leverage anymore, maybe they'll be more willing to work with patients on payment plans and be upfront about costs.
Yeah, like they'll have to find other ways to make sure they get paid, which could lead to some innovative solutions.
Exactly. It could encourage them to simplify their billing, be more transparent about pricing, and offer more flexible ways to pay.
It's almost like this rule could unintentionally push the healthcare industry to be more focused on the patient.
That's an interesting way to look at it. And it's not just healthcare providers who might be affected. Insurance companies might feel the pressure too.
Oh, right. I hadn't thought about that. How do you see this rule potentially impacting them?
Well, if medical debt isn't as big of a threat anymore, they might face more pressure to offer better coverage or lower those out-of-pocket costs.
That makes sense. They might be less likely to deny claims or pass costs on to patients if they know medical debt isn't as easy to collect through the credit system.
It's definitely something to keep an eye on. This rule could shake up the whole way medical bills are handled and paid.
It's like a chain reaction. One change leads to a bunch of adjustments throughout the whole system.
Exactly. And it's not just about the money. This rule also touches on bigger societal issues like access to health care and what it really means to be financially secure.
It makes you question how we value healthcare as a society and whether our current systems are actually working for everyone. It's easy to get caught up in the details of the rule, but it's important to remember the bigger picture. It's not just about credit scores and debt collection. It's about making a society where people can get the healthcare they need without going broke.
Couldn't agree more. It's about making sure healthcare is a right, not a privilege, and that your financial situation shouldn't stop you from getting medical treatment.
And this CFPB rule, even though it's just one piece of the puzzle, is definitely a step towards that. It's a win for consumers and a sign that things can change when we speak up and demand better.
It really shows how powerful consumer advocacy can be and how important it is to hold institutions accountable for creating systems that are fair. Speaking of accountability, let's not forget about the role of the government in all of this. This CFPB rule is a perfect example of how government regulations can actually protect consumers and make things fairer.
That's a good point. It's easy to get cynical about government, but this rule shows that they can make a positive difference, especially for consumers.
Absolutely. And it's not just the federal government either. Remember we talked about how some states and local governments are also trying to tackle medical debt?
Oh, yeah. You mentioned those initiatives that are using funds from the 2021 pandemic aid package to wipe out medical debt for tons of people.
Exactly. And it's not just about getting rid of existing debt. Some of them are trying to stop medical debt from piling up in the first place, which is really important.
It's like they're recognizing that dealing with the root causes of medical debt is just as important as dealing with the consequences.
Exactly. They're focusing on things like making healthcare more affordable, getting more people insured, and helping people understand finances better, which are all key to a long-term solution.
It's like a multi-pronged attack, realizing that the problem is complex and needs a well-rounded solution.
You know, it's really encouraging to see all these different groups, government agencies, credit bureaus, individual states and cities, all trying to do something about medical debt. It shows that more and more people are realizing this is a problem and are committed to finding solutions.
It gives me hope that maybe someday medical debt won't be such a huge problem and everyone will be able to get the health care they need without worrying about going broke.
I'm optimistic about that too. It's definitely a future worth fighting for, and it seems like we're getting closer every day.
You know, something that's really stuck with me throughout this whole discussion is how closely tied this issue is to the bigger idea of financial well-being. We often think of healthcare and finances as separate things, but this really shows how interconnected they are.
Absolutely. Your financial health and your physical health are totally linked. Medical debt can cause a lot of financial stress, and that can spill over into your overall well-being.
It can mess with your mental health, your sleep, your relationships. It can even make it hard to focus at work or school.
It's a nasty cycle where financial stress makes you unhealthy, which leads to more medical bills and more financial stress.
Like a trap that's hard to break free from.
Exactly. That's why it's so important to face medical debt head-on. We need systems that support both our physical health and our financial health, and that make sure everyone can get affordable, quality health care without the risk of financial ruin.
It's a complicated challenge, but one we can't afford to ignore.
I couldn't agree more. The stakes are too high to just sit back and do nothing.
One thing that's been really eye-opening for me is how this issue seems to affect people from all walks of life. It's not just people who are already struggling financially. We're talking about middle-class families, people with good jobs, even folks with good insurance.
You're right. Medical debt can hit anyone, no matter how much money they make or what kind of insurance they have. One unexpected medical event can be enough to push someone into debt, especially with how expensive and complicated our healthcare system is.
It's a reminder that we're all vulnerable to the unexpected, and we need a strong safety net to catch us when we fall.
It also shows how important it is to talk openly and honestly about money, both with our families and with our doctors. We need to get rid of the shame around debt and ask for help when we need it.
Yeah, it's like we need to make it normal to talk about money and healthcare so we can stand up for ourselves and support each other.
Exactly. And that includes pushing for policies and systems that make healthcare affordable and accessible for everyone.
So for our listeners, what's the bottom line here?
Well, first of all, you're not alone in this. Millions of Americans are dealing with medical debt, and it's not your fault.
Remember, medical debt often happens because of a broken system, not because you did something wrong.
Exactly. Don't be afraid to reach out for help and advocate for yourself. There are resources out there, and you have rights as a consumer.
And remember, your financial well-being is tied to your overall health and happiness. Taking steps to manage your money and tackle any debt you have can make a real difference in your life.
And don't forget the power of working together. We can all do our part to fight for a healthcare system that's fair and just and make sure everyone has access to quality healthcare.
This new CFPB rule is a perfect example of what happens when we speak up and demand change.
It shows that progress is possible and that if we work together, we can create a future where medical debt isn't such a huge burden.
So what's next?
Well, we've covered a lot of ground here, but there's always more to explore. We've talked about the CFPB rule, the credit bureaus, even state and local initiatives. But there's one piece of the puzzle we haven't really touched on yet.
What's that?
The role of technology in all of this. Think about it. We've got all these new apps and platforms popping up that are designed to help people manage their finances, track their spending, and even pay off debt. How could these tools be leveraged to address the specific challenges of medical debt?
That's a great question. Could we see personalized apps that help people navigate the complexities of medical billing, negotiate with providers, or even find affordable payment options?
Exactly. Or maybe AI-powered tools that can analyze medical bills for errors and identify potential savings opportunities.
It's like we're on the cusp of a whole new era in how we manage and address medical debt.
And it'll be fascinating to see how technology continues to shape the landscape and empower consumers in the years to come.
So for our listeners, we challenge you to think about how technology could be a force for good in the fight against medical debt. What kind of innovative solutions do you envision? How can we harness the power of technology to create a more equitable and accessible healthcare system for all?
Join us next time as we continue our exploration of this ever-evolving landscape. Until then, stay curious, stay informed, and stay engaged in the fight for a healthier and more financially secure future. It's wild to think about how, even before this new rule, things were already starting to shift in the credit reporting world.
Right. Like the stage was being set for this big change. You mentioned that Experian, Equifax, and TransUnion, the big credit bureaus, had already started taking off those smaller medical debts, the ones under $500, from credit reports.
Exactly, and that was just last year. Seems like they were realizing that those smaller debts didn't really tell you much about whether someone was good with their money overall.
It's almost like they were starting to see that those small medical debts were more of a symptom of a messed up healthcare system than a sign that someone was irresponsible.
I think that's a fair assessment. They were recognizing that a lot of those smaller debts came from unexpected medical bills or confusing billing practices, not because someone was blowing their money.
It's like saying that a parking ticket shouldn't determine if you're a good driver, right? The context matters.
Perfect analogy. And it wasn't just the credit bureaus. FICO and VantageScore, the companies behind those credit scores, were also changing how they factored in medical debt.
Oh, yeah. I remember hearing something about that. What kind of changes were they making?
Well, VantageScore actually took out all medical debt from their scoring model last year, and FICO made it so that medical debt had much less of an impact on their scores.
So there was already a movement building to downplay the role of medical debt when it came to credit.
Absolutely. This new CFPB rule feels like the culmination of all that work, taking it to the next level by completely banning medical debt from lending decisions.
It really shows how complex this whole issue is. There are so many different players involved, and it's cool to see that change can come from multiple places.
It definitely reminds us that progress isn't always a straight line. It takes time, effort, and a willingness to adapt and change.
Speaking of adapting, let's switch gears a bit and talk about the potential long-term effects of this rule. We've talked about patients and consumers, but what about healthcare providers? How could this affect them?
It'll be interesting to see how this rule changes the relationship between patients and healthcare providers.
Right. Could this lead to more open communication about costs and more transparency in healthcare pricing?
It's definitely possible. If healthcare providers can't use credit reporting as leverage, they might be more willing to work with patients on affordable payment plans.
Like they'll need to find new ways to make sure they get paid, which could spark some creativity.
Exactly. It could push them to streamline their billing processes, be more upfront about costs, and offer more flexibility with payments.
It's almost like this rule could unintentionally push the healthcare industry to become more patient-centered.
I like that perspective. And it's not just healthcare providers who might be affected. What about insurance companies?
Oh, right. I hadn't thought about that. How do you think this rule could impact them?
Well, if medical debt isn't as much of a threat anymore, insurance companies might feel the heat to offer better coverage or lower those out-of-pocket costs that people have to pay.
That makes sense. They might be less likely to deny claims or try to shift costs onto patients if they know that medical debt isn't as easy to collect through the credit system anymore.
It's a dynamic worth watching. This rule could really change how medical bills are dealt with and paid.
Like a domino effect, where one change sets off a bunch of adjustments throughout the whole system.
Exactly. And it's not just about the financial side of things either. This rule brings up bigger questions about access to healthcare and what it means to be financially well.
It makes you think about how our society values healthcare and whether the systems we have in place are really working for everyone. You know, it's easy to get lost in the specifics of the rule, but it's important to step back and look at the bigger picture. This isn't just about credit scores and debt collectors. It's about building a society where everyone can get the healthcare they need without going bankrupt.
I completely agree. It's about ensuring healthcare is a right, not a privilege, and that your financial situation shouldn't determine whether you can get treatment.
And the CFPB rule, even though it's just one step, is definitely a move in the right direction. It's a win for consumers and a sign that things can change when we challenge the status quo and demand better.
It shows how important it is to advocate for consumers and hold institutions accountable for making systems that are fair. And speaking of accountability, let's not forget about the government's role in all of this. This CFPB rule is a prime example of how government regulations can actually protect consumers and make things more equitable.
That's a great point. It's easy to be cynical about government bureaucracy, but this shows that the government can actually be a force for good, especially when it comes to protecting consumers.
Absolutely. And it's not just the federal government either. Remember, we talked about those state and local governments that are also taking steps to tackle medical debt.
Oh, yeah. You mentioned those programs that are using money from the 2021 pandemic aid package to help people get rid of their medical debt.
Exactly. And it's not just about wiping out existing debt either. Some of them are trying to prevent medical debt from building up in the first place, which is key.
It's like they're realizing that dealing with the root causes of medical debt is just as important as dealing with the effects.
Exactly. They're focusing on things like making healthcare more affordable, getting more people insured, and helping people become more financially literate, which are all essential parts of a long-term solution.
It's like a multifaceted approach, recognizing that the problem is complex and requires a holistic solution.
You know, it's really encouraging to see all these different players, government agencies, credit bureaus, individual states, and cities all working towards the same goal of easing the burden of medical debt. It shows that more and more people are aware of the issue and are dedicated to finding solutions.
It makes me optimistic that someday medical debt won't be such a widespread problem, and everyone will be able to access the health care they need without the fear of financial ruin.
I share your optimism. It's a future worth working towards, and it feels like we're making progress every day.
Something that's really resonated with me throughout this whole conversation is how closely this issue is tied to the broader concept of financial well-being. We often think of healthcare and finances as separate things, but this shows how interconnected they really are.
That's so true. Your financial health and your physical health are completely intertwined. Medical debt can cause a ton of financial stress, which can have a ripple effect on your overall well-being.
Exactly. It can lead to anxiety, depression, trouble sleeping, even strained relationships. It can make it hard to concentrate at work or school.
It's this vicious cycle where financial stress makes you sicker, which leads to more medical bills and more financial stress.
It's like a trap that's hard to get out of.
Exactly. And that's why it's crucial to tackle medical debt head on. We need to create systems that support both our physical health and our financial health and ensure everyone can access affordable, quality health care without the risk of financial ruin.
It's a complex challenge, but we can't just ignore it.
Absolutely. The stakes are too high to do nothing.
One thing that's really struck me is how this issue seems to be affecting people from all walks of life. It's not just those who are already struggling to make ends meet. We're talking about middle-class families, people with good jobs, even folks with good health insurance.
You're absolutely right. Medical debt can affect anyone, regardless of income or insurance status. One unexpected medical event can be all it takes to push someone into debt, especially with our healthcare system being so expensive and complicated.
It's a reminder that we're all vulnerable to the unexpected and that a strong safety net is crucial for everyone.
It also underscores the importance of having open and honest conversations about finances, both within our families and with our healthcare providers. We need to break the stigma around debt and seek help when we need it.
It's like we need to make it normal to talk about money and healthcare so that we can advocate for ourselves and support one another.
Exactly. And that includes advocating for policies and systems that prioritize affordable and accessible healthcare for all.
So for our listeners, what's the takeaway here?
Well, the most important thing to remember is that you're not alone. Millions of Americans are facing medical debt, and it's nothing to be ashamed of.
Medical debt is often the result of a broken system, not personal shortcomings.
Exactly. Don't be afraid to reach out for help and stand up for yourself. There are resources available, and you have rights as a consumer.
And remember, your financial well-being is deeply connected to your overall health and happiness. Taking steps to manage your finances and address any debt you may have can have a positive ripple effect on your life.
And never underestimate the power of collective action. We can all play a role in advocating for a healthcare system that is fair, equitable, and puts the well-being of everyone front and center.
This new CFPB rule is a testament to what can happen when people speak up and demand change.
It's a sign that progress is possible and that we can, as a society, build a future where medical debt is no longer such a pervasive and crippling problem.
So where do we go from here?
We've covered a lot of ground in this deep dive, but there's always more to explore. We've discussed the CFPB rule, the credit bureaus, and even state and local initiatives. But there's one piece of the puzzle we haven't really delved into yet.
What's that?
The role of technology in all of this. Think about it. We have all these new apps and platforms popping up designed to help people manage their finances, track their spending, and even pay off debt. How can these tools be used to address the specific challenges of medical debt?
That's a fantastic question. Could we see personalized apps that guide people through the complexities of medical billing, help them negotiate with providers, or even connect them with affordable payment options?
Exactly. Or maybe AI-powered tools that can scan medical bills for errors and highlight potential savings opportunities.
It's like we're on the verge of a whole new era in how we approach and manage medical debt.
And it will be fascinating to observe how technology continues to reshape this landscape and empower consumers in the coming years.
So we challenge our listeners. Think about how technology can be a force for good in the fight against medical debt. What innovative solutions can you envision? How can we utilize technology to create a healthcare system that is more equitable and accessible for everyone?
Join us next time as we continue exploring this evolving landscape. Until then, stay curious, stay informed, and stay engaged in the fight for a healthier and more financially secure future.
And we're back for the final part of our deep dive into this new CFPB rule and what it means for medical debt.
It's been quite a journey exploring all the angles of this issue, hasn't it?
It really has. So much to unpack here. One thing that keeps coming back to me is how even before this rule, the landscape was already shifting when it came to credit reporting.
Yeah, it's like the groundwork was already being laid for this change, even without the CFPB stepping in.
Exactly. We talked about how Experian, Equifax, and TransUnion, those big credit reporting agencies, were already removing those smaller medical debts under $500 from their reports.
Right, and that was just last year. It seems like they were starting to realize that those smaller debts weren't a reliable way to judge someone's overall creditworthiness.
It was like they were recognizing that medical debt is different, right?
Yeah.
It often has more to do with a flawed healthcare system than someone being irresponsible with their money.
Absolutely. A $200 medical bill doesn't mean someone's bad with their finances. It could just mean they got hit with an unexpected expense or a confusing bill.
It's like saying a parking ticket shouldn't determine if you're a good driver. Context matters.
Perfect analogy. And it wasn't just the credit bureaus. FICO and VantageScore, the companies that create those credit scores, were also changing how they factored in medical debt.
Oh, yeah, I remember that. What were some of the changes they were making?
Well, VantageScore actually went all the way and removed all medical debt from their scoring model last year. And FICO made it so medical debt had a much smaller impact on a person's score.
So it seems like there was already a movement building to downplay the role of medical debt in these credit assessments.
Definitely. And this new CFPB rule feels like the culmination of all that, taking it a step further by completely banning medical debt from those lending decisions.
It shows you how complicated this issue is. There are so many moving pieces, and it's encouraging to see that change can come from different directions.
It's a good reminder that progress isn't always a straight line. It takes time, effort, and a willingness to adapt.
Well, on that note, it feels like a good time to start wrapping up this deep dive. Any final thoughts for our listeners?
At the end of the day, I think the biggest takeaway here is one of hope and empowerment. This new rule is a major win for consumers, especially those who have been dealing with the burden of medical debt.
It's a sign that things can change for the better, and that we can work together to create a system that's more fair and compassionate.
Exactly. And while this is a big step forward, it's also a call to action. We need to stay engaged, keep learning about this issue, and keep pushing for a healthcare system that puts affordability and accessibility first.
We can't let this momentum fade away. We have to keep fighting for policies that make healthcare a right, not a privilege, and help people achieve financial stability.
And we need to support each other. If you're struggling with medical debt, please remember that you're not alone. There are resources out there to help, and you have rights as a consumer.
And that's a wrap on another deep dive. Thanks for joining us on this journey of exploration.
It's always a pleasure to dig into these complex issues with you. Remember, knowledge is power, and together we can make a difference. Until next time, stay curious.
Another insightful episode of the Deep Dive Credit Podcast, brought to you by Elite Credit Solutions, your go-to resource for affordable credit repair across the United States. We appreciate you joining us today, and we hope you found the information valuable and empowering. If you're ready to take control of your financial future, don't hesitate to reach out to us at 813-317-6776. Additionally, don't forget to like today's podcast, share with your friends on social media, follow us, and subscribe to our YouTube channel to stay in tune with future updates. Thank you for listening. And until next time, keep striving for excellence in your credit journey.